All right, welcome to another Futures Initiative Trading Recap. Today we have our special guest Amari, and as usual, we have Dubster with us. So today we are going over our trades of today, our trades of the Asian session, London session, and New York session, as well as our setups for tomorrow and the rest of the week. As always, we're always going to show the good, the bad, the ugly, and what we hope to happen, and the plans that we are going to implement to make our hopes and dreams happen. So, Dubster, take it away.
Awesome. All right. So we're going to start out with QQQ today. The reason why we're going to start with QQQ today is because we had a really nice setup today. And the reason why I say we have, because we were playing off this healthy order block, this specific section right here. We're off the 1 hour frequency right now. We know that this specific candle was the highest part of this mountain, and it had this imbalance in this section here, which we counted as a healthy order block. We saw that price action today during pre-markets came up, almost touched this 0.5 of this order block, almost grabbed it, didn't grab it completely, came back down, and we pretty much respected these lows on the pre-market session. So went ahead, I charted out everything that I wanted to see. I wanted some rebound section from this specific healthy order block, or to take longs, or we wanted the rejection out from on top of here. Reason why we really wanted this rejection from on top from this healthy order block was because it never got mitigated during pre-market. So I expected market to come back up here, grab whatever it needed to off of this healthy order block, and continue to the downside, which we actually did. One thing is that I never actually took this trade on options. I took it on NQ. It's just right here. It was perfectly executed. We made bank off of this one on the NQ, not on options, but this is just the trade that was set up from the get-go pre-market, and it actually executed the way we wanted to. One thing I did chart out throughout the New York session was that during this section, when it continued to the downside, we had a huge momentum to the downside, and which caused this break of structure during this section here, leaving these imbalances on behind. And one mistake that I caught play was that I played off of this specific fair value gap. Reason why this mistake happened was because I charted this when it was around this candle, and I never went back to chart it and noticed that this candle was the one that broke my structure. If I would have seen that, I should have drawn this fair value gap. Reason why this fair value gap would have been better was because this was a candle that broke the structure, which means this is a candle that was very bearish on this fair value gap. So we should have actually played this specific session. Obviously, stop loss is a couple ticks from the fair value gaps candle, and we would have executed this one just the way we wanted to. But we never took this play. I was waiting for this whole time. I never went back to chart it out again, so I missed this. But looking back at the game plan, we obviously now found our issue, found this error, and we should have caught this. But other than that, no options trade today. Execution on this section was fabulous. We never played it though, but I just want to point out that it played out really well here on options. We're gonna go ahead and move out to NQ now. We're gonna go ahead and drop down to the 1 hour frequency again. And I'm gonna show you guys the specific section I just showed you guys off of QQQ. We have this section right here, this candle, healthy order block, reason why this imbalance in this specific section. But there's something very important that I wanted to point out. When market opened here on this specific area on Sunday, we had a gap up. As soon as market opened, it took off, almost mitigated this healthy order block off the 0.5, came back down, went back up in. I went ahead and still played this strategy, and I forgot about this. Reason why I forgot about this and I just ignored it was because I saw it as a liquidity. So I figured market would have to just come back up and balance this out. Reason why is because this gap up made a huge continuation to the downside, upside, and then continued to the downside instantly. Huge rejection. So I figured, you know what, this might just be a liquidity grab. So we followed a strategy, went ahead, entered a contract here. As soon as it entered a healthy order block, entered 2 more contracts at the 0.75. Little did we know, it actually came back down. We took profits before we went to sleep, and this was just a really good trade. Another trade that we did do was I left it open because I still wanted this 0.5 to get grabbed. So before I went to sleep, I actually left my limit orders open and we took this trade again. We did the same entries, 1 contract here, 2 contracts here. The only best part about this was I was asleep during this whole time. So I was actually able to catch a very large movement off of this. So when I woke up today in the morning, I was out in profits, and that was pretty much the trade for this section. But another important thing was that, as you guys can see, this 0.5 section never got mitigated. So what did we do again? We played the same exact strategy. 1 contract here, 2 contracts here, plus full position on this section, and we never got wicked out. We did go on the negative. We were about $400 down, $400 to $500. Came back into the green instantly and took full profits here. So that was just the beauty. One more position that I took today was a market structure shift. On this specific session here, we're going to drop down to the 5-minute. As you guys can see, we talked about this on the last recap. I wanted these specific sections to be grabbed, this healthy order block to the upside from the 1 hour, and I wanted this fair value gap. Today, we made some semi-equal lows, never grabbed this fair value gap. So instead of playing the instant rejection, I wanted a market structure shift. As you guys can see here on this specific session, on this specific section here, we had a fair value gap. Why did we use this one as a confluence, or why did we want to jump on this one? Was because it was the candle that broke this structure. This one right here. So leaving this imbalance, took off, did a break of structure. When it came back down, I wanted to jump in. As you guys can see, went up, this candle came back down, open here, came back down to this section, wicked us in, almost wicked us out. Remember, whenever we play these market structure shifts, I like playing them on the fair value gaps candle and a couple ticks below the wick. And as you guys can see, it almost came down to equals, but we would have never gotten out. So this was still valid. And we continued to the upside. I actually did not hold full position here. As soon as it got around this specific area here for the break of structures, I took profit and I got out. So these were the trades of the day. I just wanted to point out that the main important thing that we did today was that we played the same play 3 times in a row. From now on, I don't know if I would still do it because maybe it was luck since it was news day, but I know that this one right here was just very important to keep in mind that this was definitely most likely a liquidity grab. So I expect the market to continue to the upside, grab this guy and then reject down since I wanted some no's. But I don't know if this was just pure luck today or the fact that it was news days caused so much volatility to the upside and to the downside so many times today. So that's just something I wanted to point out and see what goes on in the future.
So I like that a lot. You know what? You took the same play, like you said, 3 times over. It was the same kind of setup. It was the same exact replica of a play, but it gave you the chance 3 times today, and you took it, which is great. You know what? You found the setup, you found the entry, you knew your stop loss, and you let it rip. It's fantastic. I actually took similar plays on QQQ, where I had I actually took the play. So I had initially made the call up here to take the play to the downside, but we missed our entry, and our rule is we're not chasing. I don't care. We're not chasing. I'm not chasing it. I'm not allowing it. It ran over 300%, almost 400%. It went from 0.45 to I think almost 2.0. So I was real happy with that one. But it's okay because I took it on futures. And that is So I took this play right down here, and we're going to actually drop into the 5-minute chart because I believe that that is important. So we took that play, not to the upside, but definitely to the downside. So the moment I saw this happen, got in just above here. My stop loss was consequent encroachment. Okay. My target was the fair value gap. So we took this on futures. So if we switch back over here, we see that we didn't even come back in. But I saw this starting to run and said, you know what? Let's take it. The moment we had exited the fair value gap, I took this and let it run down to this fair value gap. So about 20 bars. It was great. I leveraged in a little bit, not how much I normally do. I realized that that is one of my downfalls is I will over leverage. So instead of going with 5 minis, I went with 2 minis, and I stuck with that. And I'm starting to label all of my setups A, B, C, which defines my leverage and my risk parameters. So if I am in on a, so for example, if I'm in on a C grade setup, I will only do 5 micros and have a 10 bar stop loss. But I'll let those run to where I believe price should go to. Then on my A plus setups, I'll leverage in 3 to 4 minis. My B setup 1 mini. But that is, those are all different types of trades, different models, but they do allow me to enter the market and have another chance and see, allow me to really grade these setups for the future. Because what may be my A setup now might end up being my C setup in 6 months. So that is why I do take those setups, because yes, are they profitable? Yes. But do I want to take them as a test, but with less leverage? Absolutely. After I reach a certain threshold, my threshold on my 100K account is 2,000 a day. It just so happened that I was able to make 3. But after 2,000, I'm out. I'm done. I'm gone. See you later. We shall see what happens. But that is my strategy moving forward, which helps me to not overtrade, since I know that has been a problem in the past. So on NQ, we took this to the downside. My final target was down here. I wanted this to get taken, but I did not want to hold all the way down. So I took a trade to the downside. After this one, I took another one again. We retraced back up. I saw the displacement, thought, okay, this is lunchtime macro, had a 10 bar stop loss, and let it run to the downside. This was a larger play. I leveraged in with 3 minis. This play brought me the largest portion of my profit. I did take another down here, and I got burned. So I was okay with that. You know what? I was okay with getting burned. We came back in. It was around here that I took calls on QQQ. So here on QQQ, we actually took calls to the upside and continued to average down. So we took calls here, average down here, average down here. Now you might ask, why are you averaging down so much? Well, my expectation is for this to come to reject a discount PD array. So what do I mean by a discount PD array? we have the high, and we have the low. The 0.5 is right here. As a general rule of thumb that I need to get better at sticking to, we don't short in a discount. We only go long, which is what I should have done. And I did. On options, we went long around here, and we continued to average down, taking most of our contracts off up here. Because we averaged down, we were well in the profits before this happened. So, but I took 10 of my 15 contracts off here, held the rest. Then at the very end of the day, sold some. So the last 5, albeit for a loss, they actually ran 100% up here, which was nuts. So those were my trades for today. Something I do want to talk about is paying attention to trades on the chart. Okay. Now, those who use Quant Tower need to double check this. Okay. I've been burned by this. I'm looking for another platform, but today one of my accounts got burned because I went to work and didn't realize that there were still trades on my chart, open orders. Given the velocity of today's movement, one of them got triggered. That was for a large number of contracts of minis, and I wasn't able to close the trade in time. I didn't even realize what was going on. So always be mindful. Now, I'm not blaming anyone but myself. I should have been more careful. But that's something that I'll have to take and deal with in the future. But what are my expectations for tomorrow, the next day, the day after? Okay. We have lots of liquidity to the downside, and we're creating even more with these wicks. Right below 14,900. But also to the upside at about 1,500. We have relatively equal highs to the upside. We also have order blocks to the upside. We have lots of fair value gaps to the upside. So now that we've completely balanced the range out, let's see where exactly we could see a retracement. Potentially all the way back up to 15,765, or are we more likely to see something come back up to around 1,504.77? Long term, that is my target, is to the upside. I do believe that since we are going into an election year, we could retrace all the way down below the weekly fair value gap and even into the monthly fair value gap. So those are things to pay attention to for tomorrow. I want to see this 4-hour fair value gap get run through as sort of like the final test to the downside, and then a massive rejection to the upside. But that is my expectation. I do believe that we will take out the daily fair value gap this week on the upside, but that is to be seen. All right, I know that was a lot to take in, a lot of explanation. Any questions, comments, concerns, guys? All are welcome.
I have one question. I know you took calls from options today,
Uh-huh.
and you took them pretty much at the bottom section.
Yep.
Um, when you took those calls, what was your reasoning for that?
So my reasoning for taking them down here,
Mm-hmm.
because we had come back and cleared this area, we balanced this price range. It was more so of we had come back down, even down here, to take the fair value gap. Right. So if you look on the 1 hour, I'm sorry, I meant the 5 minute, you saw this large liquidity void.
Yep.
Right. So yeah, we came back down, we ran through it, we come up, came back down. This was my target, was actually the halfway point right here. So taking this fair value gap, closing it officially, the immediate rebalance is why I took it. Because this gave promise to the upside.
Yeah.
Now, was that the only thing I was targeting? Absolutely not. Understanding that we did have a balance, sorry, an imbalance today here. Again, we had already closed it. By the time we wicked in, I was expecting a much larger run, which we did see on the 1 hour. The entry was correct on the 1 hour because we got in here. What I was not expecting was this to retrace down further, which now that I look at it, it makes sense. It lines up with the breaker candle. So this is the breaker candle right here. That should have been my entry. But going off that as well, could have been down here, but seeing as, remember what we spoke about, the long wick, that liquidation is incentive to go and target the opposite direction.
Okay.
That is something I'm still back testing. When I see a long liquidation, see, but where that gets confusing is right here. Is it to target the upside? I mean, granted, absolutely. You got in here, you got out here, you got 40 bars. Kudos. You got 40, 50 bars. But same time, lunchtime macro. So I try to play that off the 5 minute. So you get a large liquidation down, covers on the fair value gap, loads to the breaker candle, and then it runs. Then you can see the same thing here. You got all these longer wicks. It's like, okay, this is going to see more upside. Same thing here. So it's liquidation candles like this, albeit we came back to it in London. But before then, we came down quite a bit. So that is something that I'm currently back testing, but that was why I took calls.
Okay. I was just curious because I took them before that, so I know I wanted calls because I wanted to take puts from on top. Obviously, I misplaced my first fair value gap entry because I did it from the top part of the fair value gap before the one that broke the structure. So, but now looking at it, it makes sense. I just want to know why you took calls there because I was expecting an upside. I did not enter that upside on that area, but I just wanted to see your point of view.
Yeah, absolutely. And I I welcome all opinions and comments because again, no two people are going to see the exact same thing on the chart. So you're going to see something different than I see.
Yeah,
But what other questions do y'all
I'm
have?
good. I have nothing else. Think it was a good day.
Absolutely. We were green all the way around. Yeah.
Yeah, we're green today.
All right. Well, with that being said, we will conclude this trading recap. We look forward to seeing everyone in the next one. Please leave your comments below and we will get to them as we can. We'll catch y'all later.
Have a good day.